In this presentation, we will discuss collections as they relate to non-governmental, not-for-profit organizations, non-governmental NFPs. When you hear the term collections, you might think of the term collectibles, collections, collectibles. Collections are works of art, historical treasures, or similar assets that are held for public exhibition, education, or research in furtherance of public service rather than financial gain. So these are collectible type of items, collections type of items, not held simply for financial gain, but held for public exhibition, education, or research in furtherance of public service. Protected, kept unencumbered, cared for, and preserved, subject to an organizational policy that requires the proceeds of items that are sold to be used to acquire other items for collection. So in other words, if we sell basically the collections types of items, the revenue that would be used at that sales point would be used for the more collectibles to be purchased. Collections, capitalized collections are recognized as assets in the period they are acquired. So if we are to capitalize the collection, they're going to be represented as assets in the period required. If we purchase them, obviously they would be represented as an asset at the point in time of purchase for possibly the cost of it. If they're donated, then of course that would be the time that we would be receiving them as well at the point of the donation of the collections. Capitalized art historical treasures do not need to be depreciated if their economic benefit is used up so slowly that their estimated useful lives are extraordinarily long. So if we have these collectibles on the book, you might say, hey, this is a work of art. It's not going to depreciate possibly. It will go down and depreciate in terms of its physical depreciation will go down over some period of time, but possibly that might be much longer than a lifetime, and therefore maybe it's something that we shouldn't be depreciating, but keep it on the books considering the fact that it's going to deteriorate so slowly that the value of it should be retained for a very long period of time. Therefore, we have something on the books that's going to be basically an asset. Usually we allocate the cost with regards, for example, to property, plant, and equipment. We may have an exception to that with regards to collections if it's going to take a long time for them to basically go down in value. How would we know that? Well, this happens if the assets individually have cultural, aesthetic, or historic value that is worth preserving perpetually, and 2, the holder has the technological and financial ability to protect and preserve essentially undiminished the service potential of the asset and is doing that.